Now, another area that investors have been very interested in lately is artificial intelligence. Are you investing in things relating to artificial intelligence?
You know, the most direct investment we have in AI, I would say, is Google or Alphabet, which has
You're a big shareholder of Alphabet.
We're a small shareholder of Alphabet because it's a massive company. We've got a large investment, it's approaching $2 billion investment in the business, and actually it was AI that created the opportunity for us to buy Google at an attractive price. You know, basically Microsoft and OpenAI had a very powerful demonstration of and a launch of a new product, and then Google's kind of launch, or it was a bit of a disaster. Stock got crushed on the basis of fear that Google was way behind in AI, and their advertising franchise more than covered the value of the company, and you got whatever they were doing in AI, if you will, for free. And our view, based on work we had done, is that actually Google was sort of neck and neck, if not ahead of OpenAI in terms of their business progress.
That right there was legendary investor Bill Ackman from Pershing Square Capital explaining his Google thesis, and you can see he has around $2 billion worth of Google stock. So in this video, I'm going to be talking about why I bought Google stock, run through their earnings quickly, and lastly, I'm going to be unveiling a public portfolio that I'll be building on YouTube. So let's start off with Google earnings, and you can see in 2024, this is for the whole fiscal year of 2024, right? They had 350 billion worth of revenues, up 15% year over year. This is their operating income, and you can see their other expenses. So you can see that their net income is $100 billion and EPS is $8.04, right? So keep in mind these numbers because we'll be using them later. So you can see this is a breakdown. So pause the video if you want to go through it, right? Because as I said, I'm going to quickly go through these numbers because Google, like Alibaba, has so many business segments that I cannot go through it slowly, right? And also, this is not like a full earnings breakdown, right? I'm just doing this because I want to value the company later. So you can see that these are the income from operations. So the reason that I put this slide on here is because of the number of employees, right? You can see that the number of employees year over year is actually not growing so much anymore. And that's maybe one thing that we can take away from the macro economy. But also maybe it's a Google specific thing, right? We always knew that Google has such a good business that they were actually quite inefficient, right? So maybe this is a way of showing us that they are becoming more cost disciplined and more efficient. So next, let's take a look at the balance sheet. Balance sheet looks very clean, 95 billion in cash and cash equivalents, about 125 billions in commitments and contingencies. But you can see, obviously, if you use total assets, it's 450 billion. After minusing the goodwill, maybe like 430 billion. So obviously the commitments and contingencies is like quite little versus the total assets for Google. So very healthy balance sheet here. I would say it's a A+ balance sheet for sure. Next, if we take a look at the consolidated statement of income, you can see again $100 billion. Basic net income per share, $8.13. So I'm not going to use basic because diluted is the one that we should use. So why should we use numbers that Google calculated that doesn't include stock-based compensation and stuff like that, right? That just makes no sense, right? We should use the more conservative numbers, right? And I know some people use these numbers to make their numbers look better, but you're not getting those earnings, right? Because stock-based compensation is also a cost for shareholders, right? So next, if we take a look at the cash flow statements, you can see that net income is after adjustments, right? Which I really like, right? Some companies actually lump it in together with the, like, they don't show you the stock-based compensation separately, and then you have to go and find it yourself, right? So this is very clear. Stock-based compensation is not going up that much year over year, only about 300 million year over year. And I said only, right? But compared to the market cap and things like that, it's very, very small amounts, right? So you can see net cash provided by operating activities is actually higher than their net income. So some people might be wondering, why is that the case? So obviously they have these other line items, and then also stock-based compensation. You also get some cash from there, right? And depreciation is a non-cash expense, right? So if we take a look at their repurchase of stock, it's about 62 billion and dividends about 7.3 billion. So something to note is that they didn't actually have a dividend for their entire company history, but in 2024 they started a dividend, right? So Next, this is the breakdown of the programs. So you can see Google Services, Google Cloud, other bets, and hedging, right? So I think Google Services is all the search and all that. You can see, you can read it from here, right? So I'm not going to go through it one by one. So compared to the main business, Google Cloud is obviously very small, right? So we're talking about a $45 billion run rate business, but it's still small compared to their main business. So this is a graphic of how Google makes their money. So I'm only highlighting this to look at the proportions, right? Not really the numbers, right? Because the numbers are for 3 months for 31st of March, right? Obviously that's outdated already, but the proportions still maintain quite intact, right? So you can see that obviously search is still the bulk of the Google's money-making machine, right? And that is where we have the problem as well, right? Because everyone believes that all this AI will take over search, right? But me personally, I've been using Google's AI because I think Google will be a winner in the sense that they have all the data, right? So all these training companies or LLM companies, they will need the data, right? So who are they going to turn to? They are going to turn to Google, right? And if Google has all the data and they have the talent to produce all these AI models as well, right? So I think they'll still be one of the winners in the AI race as well. So I don't think search advertising is just going to completely go to zero. And I think even if it does go to zero, it will take a long time, right? I'm talking about 10, 20, 30 years, right? Not in the next 2 years as people are professing. Because you can see that most people, if you ask them how do they get their information still, yeah, maybe some of them use AI chatbots and stuff like that. Like me as well, right? I do use AI chatbots, but I still use Google most of the time. And I use AI chatbots with Google, right? It's not like, oh, because I have AI chatbots, I stop using Google now. I use Google and I use AI chatbots, but definitely the time spent on Google will lower because you have the AI chatbots, right? If you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button. This will help out the channel immensely, and I thank you very much. So lastly, I'm going to do a valuation on Google. This is going to be a very quick valuation. I'm not going to value it part by part. I'm just going to value the whole company. So you can see they returned about $70 billion to shareholders in 2024. And this is a theme that I think is going to happen into the future, right? Because Google, like Apple, is a cash flow printing machine, right? So in future, I think they're going to do a lot of buybacks as they already have. And I think this is quite expected from shareholders, right? So YouTube and Cloud is a $110 billion run rate. Revenue is growing about 10 to 15%. This is something that interests me, right? Because it's not, Google is not trading at like 7 times earnings like some of the shares that I've been talking about, or they're not trading like very cheap. But later I'll get into the valuation, right? But their return on invested capital is incredibly high, right? So 30+%, right? But I think this is at some elevated numbers. I would say the normal rate is about 25% to 30%. So if we take a look at EPS, it's about $8.04. Net income 100 billion. So EPS is 21.14 times, right? And I think 2025 EPS should be 10 to 15% lower because obviously every year these big tech companies are just growing their earnings, right? That's why the multiple and the premium on them is there, right? So if they can grow 10 to 15 times, then it's about a 19 or 18 times earnings. And I wouldn't be surprised if they grow even higher than this, right? Because these companies are doing massive buybacks, right? So their EPS is actually growing faster than their revenue, and also their profits can grow much faster than their revenue, right? So next, if we use the net income, it's a 21 times net income, almost the same as this, right? So you can see that the EPS and the net income are quite similar, right? And the free cash flow is also quite similar if you remove the AI capex, right? So again, 2025 should be 10 to 15 times earnings. So it's also about that 18 to 19 times earnings ratio, right? So buying for my public portfolio, right? So I'm announcing a public portfolio in the next slide. So we'll skip that for now, right? So not sure if buying for my main portfolio at this current point in time, because again, the search risk is a risk that we do really have to factor in. But at this point, I'm asking myself, is it overblown or not? Because like Meta in 2022, when TikTok came around, but obviously Meta's decline was way higher. It was like a 75% decline or something like that. Google is now down maybe 20% from its all-time high, so it's clearly not the same level of fear, right? So looks like there are other things with higher return profiles right now. So obviously Google is one of those stocks where you will get a slow and steady return, right? But maybe I'm looking for a bit something with a bit higher return profile, and but also there will be higher risk, right? Because something like Google, I think I can make it a part of my portfolio. I'm just not sure yet. And I need some time to digest and also think about it, right? And with a stock like Google, I can take some time, right? Maybe 1, 2, 3 months to think about it, right? Because the stock won't completely run away, right? Or it might. I have no idea. So here are some of the public portfolio that I'm going to be unveiling. So start with 10,000 US dollar, and I'm gonna add 1,000 US dollars every month, and I'm trying to get to $100,000 in 5 years, right? And the goal is to remain fully invested always. So targeting a 20% return annually. And some of the reasons that I'm doing this is because I want to build a public portfolio on YouTube, right? And I think people think that a 6-figure portfolio is very far away or something like that. But if you can see that you start with 10,000 and you add 1,000 a year, and it's 20%, right? You can get to 100,000 within 5 years, right? And it's better than doing nothing, right? So starting now is always better than doing some nothing, right? Because even if you're adding 500, it might take you longer, but if you don't do anything, you won't get anywhere. So I'm using smaller positions to learn about certain stocks that I find interesting, but I may not yet have enough conviction to add it to my main portfolio, right? So I'm going to use the public portfolio also as a place to learn, not only to try to maximize returns, but also to learn, right? Because so some of these learnings can be used in other portfolios as well, and I think that's one big factor of me doing this public portfolio. So the last thing I want to mention is that the stocks may be very different from my main portfolio, right? But it's likely to have a lot of overlap because obviously I will use my best ideas in the public portfolio as well, right? So why would I not give you guys like some of my best ideas, right? But obviously some ideas here are not like fully developed, and I'm only going to put $1,000 into each position, so I'll have 10 positions at the start. So when I add $1,000 every month, I'll see what's the best risk to reward that I can find at that time, and then I'll add it, right? Sometimes it might be just something that's already inside the portfolio, and sometimes there might be something that is not inside the portfolio. So I'm going to take a look at this compound interest calculator to show you guys, right, that actually 100,000 from 10,000, but you just have to add 1,000 every month. It's very possible, right? Because you can see even your total contributions is actually 70,000, so your returns actually don't have to be that high. I think you can do it with even less returns, let's say. So okay, you can't do it with 15%, but you can do it with oh, sorry, this is 12%. So even with a 15% return, you can do it, right? Because your contribution is going to be 70,000, and then your 15% performance is going to add $31,000 on top of that. And I know that is not life-changing, but obviously if you can have a 100,000 portfolio, it's much better than having a $0 portfolio, right? So I just wanted to add one thing. Currently, the public portfolio, I didn't write it down because actually I forgot. But there are 2 positions inside. One is Celsius Holdings and also one is Google. So I think by maybe 2 weeks from now or 3 weeks from now, I'll have the whole portfolio fully invested. And then I will do like a review and why I am invested in these companies, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.